Hello everyone, welcome to a product review at Finominal. In this video, we are going to look at yet another mid-cap fund. So there are a lot of mid-cap funds that I've reviewed before, right? I've reviewed DSP Mid-Cap Fund. I think 2 weeks back I reviewed Franklin India Prima Fund, which focuses primarily on mid-cap companies. So in this video, we're going to look at specifically on the Motilal Oswal Mid-Cap Fund. Now we are going to look at the direct version. They are charging about 0.7%. So whenever we are looking at any active fund, right, the first question, the main important question that you need to ask is whether it's beating the benchmark, right? Is it worth paying the manager? And well, it has beaten the benchmark, which is the Nifty Midcap 150 total return index. So since it's a mid-cap fund, we are comparing it with its appropriate benchmark here, which is the mid-cap fund, mid-cap index, right? So over the last about 5 to 6 years, it has beaten the benchmark. As of now, it has definitely outperformed. There were periods where it didn't outperform, like there were negative excess returns over here, but overall, has it outperformed just from a outperformance lens? Has it done well? The answer is yes. I will also critique this fund in terms of how we all critique the active management, the active funds, especially when it comes to mid and small cap funds, using an external research, which I will come back at the end of the video. So as I mentioned, this fund is charging about 0.7%, and it has generated a CAGR of about 27% compared to Nifty Midcap 150, which is charging about 0.2%, right, which is significantly lower in expense ratio, and it has generated a CAGR of 21%. Since it's a mid-cap fund, you will expect this fund to have a bit of size exposure, right? So that's what we are seeing here. This fund has consistently shown size factor exposure, meaning that this fund has exposure to mid and small cap companies, right? And even when you go to the risk sources, you can also see consistent size factor in almost all years. One interesting thing about this fund is that it has value factor, and more importantly, it has negative value factor, that is negative value exposure, which means that it has expensive, in terms of valuation, it has expensive companies in this fund, right? So you have a positive size factor, which is small cap companies, which generally means the fund has small cap companies. It has negative value exposure, which means that the valuation in this fund, the companies in this fund have higher valuation. Now, going to what we have already answered in the first tab, which is using simple performance, right? That this fund definitely has outperformed, because we have already seen that in the first chart, right? So this is like year on year, right? It has generated outperformance in 2019, 2021, almost 4 out of 7 years it has generated outperformance, and 8 out of 11 years it has generated alpha. And you can also see the alpha consistency in this chart. Mind that alpha in this case, we are comparing it with the standard benchmarks, right? So meaning the market, which is Nifty 50, the government bond index, which is the bond index, right? The bond index in India, right? So that's why you see a huge alpha here, because the market doesn't have any small cap exposure, right? So that's why you're seeing a very huge alpha here. You can also argue that, hey, size factor is still there, but even with the size factor, it is still giving you a lot of alpha in this case. Now going into the risk, that is what this fund has, the constituents of this fund. As expected, this has a heavy mid-cap exposure. So you can see that in the mid-cap, the market capitalization, right? About 80% of the companies in this fund has mid-cap. These are all mid-cap companies, right? And a bit of large cap, and a very tiny percent in small cap companies as well. So we are comparing this to a benchmark, right? So if you look at just pure sectoral, like sector exposures, right? This fund has a heavy consumer discretionary exposure, technology exposure. So this is like 30% versus 12%, right? Almost twice the sector exposure when it comes to technology. You also have you're overexposed to also industrials as well, and you can also see other under exposures, right? Like underweights to, let's say, financials, right? When you compare it to mid cap, the index itself, it is about 20%, whereas the Motilal Mid-Cap Fund has about only 5%. So this is about just the sectoral breakdown of the fund versus the benchmark itself. I don't think this is like an equity fund, right? So obviously the drawdowns would be similar to any equity fund. So you can't expect it to protect you or have a very diversifying returns when it comes to, let's say, COVID or even during market sell off during 2022, right? So this behaves like any other equity fund. Now, I will quickly also show you some of the cheaper funds, like cheaper mid-cap funds with similar exposure as Motilal as well, but charging you much lower fees, right? So you can we can take a couple of funds here. You can take the White Oak Fund, you can take the Edelweiss Mid-Cap Fund. We can also take the Invesco Mid-Cap Fund here. These are like direct funds, and also the White Oak Fund. So we can take it to as a comparer to compare it side by side in terms of performance and also in terms of fees. We will also look at the valuations of this fund, of these funds, right? So over the last how many years? These are like about 2 years, right? About 2.5 years. This fund, I think, see, the trends are pretty much the same among all the funds, right? So I think the most of the outperformance, or like you can see it over this region, but almost all the funds here, the trends are pretty much the same here, right? I will also include Nifty Midcap Index here, just to compare it with a benchmark, right? Just good to have a nice benchmark. To compare it side by side. So compared to all the active funds here clearly outperform the mid cap fund here, right? But when it comes to just on fees, right? This is charging the benchmark is charging about 0.2%, whereas clearly all these other funds are charging you almost 4 times the fees, right? 3 to 4 times the fees here. And what we looked at in the returns based factor exposure analysis, where I mentioned about high valuation and a low market cap, right? This can also be seen via the holdings based factor exposure analysis, right? So here what we are showing is that, hey, in terms of valuation, all these mid cap funds are on the higher end, right? All mid cap funds seems to be on the higher end, and also market capitalization. These are mid cap companies. Obviously, you expect it to have lower market capitalization. One thing that you have to know about this fund is that this is a very concentrated bet on the mid cap companies. And what do I mean by concentrated? It has about only 27 stocks compared to other mid cap funds which have more than 50 to 100 stocks, right? So here you can see that the White Oak Capital has about 120 stocks, right? So this is a very concentrated bet. So mind that, hey, you are betting on just 27 stocks, and the top about like what 7 to 8 stocks sums up to 50% of the portfolio, right? The 50% of the fund itself. So something to know about, because you're taking a concentrated bet here. So what's the conclusion here, right? So we have talked about the performance, we have talked about the returns-based factor exposure analysis. It has beaten the benchmark. It has also beaten the peers, right? Now, what's the conclusion that now we're coming to is this report, right? Which is probably the most read report when it comes to the active management, the active funds in India. You can see this third one, that what it basically tells you that these are the number of years, right? So over 10 years, about 88%, about 90% of the active mid-cap funds underperform the benchmark. And over 5 years, about 80% of the benchmarks, 80% of the active funds underperform this benchmark. So essentially what I'm coming to is that looking back, it's very easy to say, hey, this has outperformed, and you expecting it to outperform in the future, it's very unlikely that it's going to outperform because there are so many mid-cap funds, and over 10 years, 9 out of 10 funds underperform its benchmark. So going forward, is this fund going to outperform its benchmark? No one knows, right? And this is where now I would like to kind of like give you a thought-provoking question, right? That hey, looking back, it has done well. Going forward, you probably don't know. Most likely, this is going to underperform, right? Because everyone who's looking back and investing in this fund, so is the basically the fund is most likely underperform its benchmark over the next 3, 4, or 5 years, right? So we are almost at the end of this video, right? What we have learned in this video is that we have looked at the Motilal Oswal Mid-Cap Fund. Over the last 5 years, it has outperformed this benchmark. It is showing negative value exposure, a positive size exposure, which basically means that it has small mid-cap and small-cap companies with high valuations. We have also compared it with its peers, and it is outperforming all its peers, and it's almost close to the Invesco mid-cap fund. All the mid-cap funds are charging a heavy expense ratio, and we also finally concluded that hey, it's very difficult, or it's very unlikely for you to pick an active fund that's gonna outperform in the future, because 9 on 10 funds underperform its benchmark. Hope you got the gist of this video. Thanks a lot for watching. See you next time. And if you are a mutual fund distributor or a financial advisor, please do go and look at all our tools. We are aiming to simplify portfolio analysis for all the professional investors out there, not just in India, but across globe. But we are especially focusing on the financial advisory community and portfolio managers and mutual fund distributors in India. Thanks a lot for watching. See you next time.